Hi, everybody. Scott Miller with River City Mortgage and Financial, and welcome to this week's Market Minute Update. This is for the week of August 31st, 2009. Remember, this is provided to our real estate professionals and trusted financial advisors. Excuse me. If they forward this on to you, they felt that you would benefit from this information, and we thank them for that. We ask you to thank them by referring your friends, family, and work associates to them. Remember, this is not an interest rate quote. This is not a lock-in agreement. We are simply trying to provide information that can help you make a decision about locking in or floating. I want to become your lender. Please call me at 763-509-7400, or you can reach me via email. My address is smiller@rcmortgage.com. Okay, so what's going on in the market and what's happening? We got a lot of stuff going on that really shows how a world economy that we're in. Last week, the Fed, obviously with Obama recommending Bernanke to stay in as the Fed chairman, that was good. Bernanke's done a pretty good job making sure that our economy keeps going and doing what it's doing, especially when it comes to the mortgage market. They have Bernanke, by the way, is a huge scholar of the Great Depression. He's really studied what happened back then, not only in monetary but also fiscal policy and in the political arena, what was happening there, to see how it all fit together. So he's trying to make sure that we don't duplicate that here, and he's done a good job. So looking forward to the next 4 years with him. The Fed is also committed to continuing to buy mortgage-backed securities past December 31st, 2009. If you remember the previous videos, that was what the plan was, and that was pretty nervous. However, here's something to be concerned with. Overnight, the China stock market was down 7%, and that's a big deal because China holds about $1 trillion of mortgage-backed securities. They buy a lot of our debt. If we see that the dollar continues to decline, our economy's not doing well, and if China stops buying our debt, that's going to be a major problem that we're going to have here with mortgages. So this is the time to really make sure you're talking with a lender that knows what's going on and can help you make good decisions about locking or floating. The big number this week is going to come out Friday, the unemployment numbers. And we'll see we'll get a preliminary view on Wednesday what ADP is telling us is going to happen, and then we'll see how that looks on Friday. But a continued weak market is normally good for interest rates, but again, there's a lot going on. So recommend right now is what we've been recommending, and it's very difficult to keep saying the same thing simply because of the market we're in. However, you have to pay attention and meet with your lender and understand the risk. That's the best case. Long term, if you're closing the next 45 to 60 days, that's really that's a tough one. If you can absorb the loss, not that you want to, but if you can, then go ahead and float. Otherwise, lock it in, be done. Rates are historically very low right now, so you can't lose with it. But have any questions, give us a call, 763-509-7400. Thanks a lot. Have a great week.